Good afternoon, everybody, and welcome to another edition of the Business Spotlight. Today we have Ian Wollard with us. Ian is the founder and the owner of the Academy Partnership, a chartered accountancy firm based in Burford in West Oxfordshire, one of the top 10 places to live in the country, Ian, I think, apparently. So on Ian's website, guys, please take a look at the Academy Partnerships website. It is a strong website, and there are a number of key messages that lift off at you when you float through the site. The first one is you don't just need an accountant, you need answers, right? So you don't just need an accountant, you need answers. That's great. We like that. It's really positive, very clear. Couldn't agree more, Ian. The next thing that caught my eye was advisory accountants for businesses with big plans, right? So the feeling is that we're speaking to an accountant that understands the language of doing business. And that's going to be interesting to explore more, Ian. So everybody's listening. The floor is yours. Tell us about where you came from and how you've evolved to this stage.
So I've been having worked in hospitality up to when I was 21. I moved into their accounts department, and this was at what is now Estelle Manor. So the accounts department, we used to run 4 or 5 hotels, and that was always my passion. That was my academic training. So I got a job in the accounts department, and then I thought I actually do really quite like this. So I got a job at a local practice where I ultimately became a partner. But I just love practice. So I've been doing it for 25 years now. And I've done varied roles, audit, corporate finance, but it's always been, the common theme has always been working with small businesses. So own and manage businesses, what we call them. So they both own and operate the business, as you know. And really, the relationship with those clients is much nicer. I mean, I did a spell in sort of more corporate where you have a tier of management, you have executive committees, and it's their job.
Yes, of course.
So it's a very different relationship working with those types of businesses. So it was never really for me. I much preferred, you can really make a difference when it's an individual's everything. Their business becomes their absolute everything. So if you can advise them really well in terms of their business and be there to support them, you build a really long-term relationship. I think, I've had clients for over 20 years. It just makes a difference. I feel it makes a difference, and that's where I'm happier.
That's cool. So I need to address one point, though, for everybody that's watching and listening. Did you say that you found that you really liked doing accountancy at some point?
Oh yeah, no, I'm rather sad. I always wanted to do it. Yeah, so I always knew I was going to be an accountant. It was just I didn't really understand the difference between working in industry and working in private practice. So I sort of fell into private practice, but really enjoyed it. There's so much variety in what we do. No day is the same. Whereas in industry, as much as that has its own challenges and can be a lot harder than what we do, or a lot easier, depending on what they're doing, but you are typically reporting on the same products and services all the time, in the same way to the same people in the same format.
Yeah.
For me, I wouldn't particularly excel in an environment like that. I think I would get just a little bit, my mind would wander a bit too much. Whereas in private practice, I've always found I'm never bored. And I like that. I like the challenge of what we do.
Well, the statistics are stacked against the SME, aren't they? The traditional technician-owned company that is, the person has their entrepreneurial seizure. They start their business, and the statistics are something like 5.3 million in the UK, from 0 to 49 employees, and 90% of them won't make it across the next decade, irrespective of the industry and the genre. So well done, Ian, on longevity. It's a phenomenal thing. This is why we want to interview people like your good self, because you're doing it, and the people watching and listening will take a lot out of this. So thank you for your time. Ian, can I? You meant there's many different features of what you offer in terms of services on the website. It really is a good website. Now, one of them, or there were three actually, things that I underlined here that I wanted to just open up a conversation around. You offer valuations of business. So is that to a client, or could that be to a business that's not a client but requires a valuation of their business?
The latter. So that's probably the only time where we ever get a website inquiry that ever actually is valuable, and we see it through to a complete assignment. Because anything other than valuations, and we don't get a lot, but we seem to rank quite high for natural searches for valuation. I don't know if they realised that it followed up with a phone call and then it followed up to a actual complete piece of business. I'm sure Google have their way of finding this stuff out. Typically what happens is most people need a value, or think they need a valuation, and often they need lots and lots of different things, and valuation is probably the least important, but they think they need a valuation. But that's been really good for us, where there's been a business separation, typically around divorce, and the local kind of solicitors, what they want to do is they want to find an accountant that neither party's got an affiliation with. So they tend not to go to their own accountants. They with agreement, they'll go outside, just get with someone completely different. And we've ranked really well on that. So that actually does quite well. But that's a very much a one-off piece of work. It will be just, well, basically there's techniques and mechanisms that are generally accepted as to how we do this, so that both parties feel confident that they've got something that they can agree with. Completely independent party, they've come up with a figure, it's justified, there's rationale in there. We're all using effectively the same techniques to do it. So, but if none of our clients would ever say to us, "Oh, I need a valuation," because it's not what they need is an exit strategy. The valuation is important, and it's part of that, but it's part of that wider thinking around when are you going, how are you going to go, who's coming in, what time frames are we looking at, what cash does the business have, what profits it making. It's all relevant, definitely, but that particular on our website, that's for those one-off assignments where they just need somebody who's done enough valuations where they can say, listen, if I get dragged into court, you have to demonstrate that you're an expert.
Yes, of course.
So you just have to have done it lots of times, basically.
So you that's fascinating, and thank you for sharing that. I think, again, for people that are watching, if you're considering selling your business, or you're changing your life in some way, actually putting a value on your business can be quite daunting for somebody that doesn't understand how to do that. So great to hear that there are approachable accountants out there that will help. Now, you mentioned a second ago exit planning, exit opportunity. So are you guys actively helping clients sell their business? Not well. Okay, forgive me. I realise that you're not a brokerage, but are you helping facilitate the sale of the business through the carrying out of necessary valuations or other aspects of selling the business? How does it work?
So if our clients are looking for an exit, they'll come to us, they'll speak to us about it. Where we do really well is that you often end up being the only group of individuals who are prepared to pay for your business a sum that's reasonable to you, on terms that are reasonable to you, do tend to be the people that are already in your organization. And that's where we go on a journey with them to explore who are in the team and how that can work. The first thing we do is kind of just give them a little flavor of how the transaction works. And then we start to bring in the advisory team, which are the solicitors, who can start to think about how they can go through this process. If they say to us, well, I'm just going to put it on the market, then you really do need a business broker. So there's a few out there in the market, a few that we've worked with before,
Okay.
because that is about purely presenting the business to unknown third parties in a way which gets some appetite to want to buy the business.
Mm.
But this, but it all comes down to, no matter what I always say to our clients, it doesn't matter what happens. You close your business, there might be some due diligence, particularly with the insolvency practitioners trying to get the distributions done. You sell your business, there's the same due diligence, or you end up in a bad position and you get put into administration, then the due diligence is even more severe. So in a way, our job doesn't change. It doesn't matter what's going to happen in the future. You've got to make sure your historical compliance is spot on, because it's going to be checked.
What would you say is the number one key to getting maximum value for somebody? Okay, let me rephrase the question. What's the number one key thing that somebody should do to maximize the value of their business? I'm not thinking about selling it to team. I'm thinking about selling it to external third parties. What would you suggest?
Well, I mean, they need to have, they need to be able to demonstrate that they, what they're selling, that they can do a deal with the solicitors, that the solicitors understand the contracts and that they understand how they're going to come together and do the sale and purchase agreement. So I think that's quite important, is understanding what it is that you're selling. And it might be that there might be a little bit of reconstruction required well ahead of that. We've had loads of clients over the past where they've identified that that bit you'll never sell.
What do you think well ahead means?
About 2, 3, 4 years.
Good. That's interesting. So we're aligned on that. I'm totally with you there. 3 years would be the number that I would.
Yeah, definitely. So it might be that I look at a particular company. You got to bear in mind that a company, you know, if they're you want to sell the shares. I mean, that's the ultimate goal, really, because it just makes your life easier. It's a cleaner deal. I'm told by the solicitors it's easier for them as well. So if we can get the shares sold, great. But if you've been trading for 20 years as a kind of owner managed business, quite often we've done lots of things for tax reasons. And we've structured things in a particular way, and the buyers, that will cause the buyer some concern if they feel that there's risk associated with potential tax strategies and things that have happened in the past where we're not even thinking about an exit plan. Sometimes we can, as accountants, we can become a bit too obsessed with tax, I think. And it's not a criticism of what we do, it's just an observation that, one a minute, just step back, because remember, that due diligence is coming. How is that going to look to that party who's doing the due diligence? Because
Very interesting.
we need to be able to exit this business. You're going to exit it at some point. Just like, we're going to die. You're going to exit it. Don't make your life incredibly difficult. I mean, I remember going to buy a business for a client who found us through a website or was recommended to us. And after 5 minutes, I was like, you cannot buy that company. I'm sorry. You just, from what they're saying, from these emails, I'm sorry, there is absolutely no way. You need to walk away from this.
Wow.
Within a few minutes, because you can just tell that they've moved assets around. They've tried to, you know, this I've got in my personal name, this is in the company, all done for tax reasons. And then, of course, you come to sell and you've completely snookered yourself. They then need to go and spend the 3 years
restructuring their business,
restructuring it so that they've got something that the solicitors are going to be a reasonable level of indemnity, the warranties will be agreed to, and they'd snookered themselves. So that the big transaction that they could potentially get, it was over within, you know, like I say, a few minutes. It's like, you've got to be joking. You've got to walk away from this.
Love the fact that people are going to get that frank kind of advice from you. That's solid. So next question then: enabling employee share option schemes. So again, we find that a lot of people that we're engaged with over time, and people that are watching this episode, will relate to the fact that the hardest aspect of building an organization that's successful, that's aiming for level 3, is building the team. Retaining talent is essential, as you know, and inspiring them for the next push. So just quickly explain to us how you go about helping people structure share options.
So typically it's done in a sort of done well, it's done over an 8-year period. So it's done in phases. And again, this is all stuff that James and I call the BOSS strategy, which is the business owner's succession strategy. And stage one is often potentially get an EMI option scheme in place, identify your management team, and slowly but surely start to introduce them into the concept of ownership and kind of set them some standards and some things to hit over that next 3 years. And once you're satisfied that the management team's in place, which will change completely throughout that 3 years, that's my observation.
Yeah.
It starts off with these individuals who are kind of maybe the best at sales, maybe the best technical people, and by the end of it, it's 3 completely different individuals, because it almost draws out sometimes a huge amount of anxiety, and they just don't want to do it, and they just like voluntarily step down. And just, to be honest, I'm quite happy just being my role. I really don't want it. So you go through that, and it can be a dangerous thing because you don't want to lose your key people just by scaring them off. But once you've found your team, then effectively it's just a bog standard MBO. They form a company. There's a value placed on the business at an MBO. Here's where you can use the EMI options to get some really good tax relief. And then effectively, a new co, which is owned by the management team, and in very key, the old exiting guy or woman, because I find that if they retain a small percentage in the new co, they can become an ambassador for the business, because quite often that individual for an owner managed business is so key. The suppliers, the customers, the banking relationships, they don't want to just see that guy is just going to exit into the background, nor do they often want to. They want to be involved still, but they can really reduce their shareholding down. And their job now is to be a non-executive kind of, a leader in terms of, or someone who's there as a mentor who can say, listen, guys, I tried that 20 years ago. It's a great idea. Watch out for these few things that could happen.
Yeah.
To the outside world, there's still that connection with that original founder, which I think, it may be wrong here, but it feels like that's going to be important.
Okay, so it sounded like your answer again. The depth and the picture you're painting is excellent. Thank you, Ian. Let me just drill into one more point. Consider company A that has 4 critical employees. Company A is owned by 2 guys who currently own the business 50-50. Now, they aren't planning exit, but they would like to dilute shares and give shares to the 4 critical employees so they feel that they have ownership. So they're creating a share option scheme that may, in 3 to 5 to 10, turn into something else, but that's not on the table at the moment. Is that something that you could help with?
That is the BOSS strategy. It's designed so that at any point, if there was a trade buyer that was to come along, then that's it. It's just then, if there is an option agreement in place, whatever percentage of the company that's been agreed at whatever valuation has been agreed, then the employees will exit at the same time. Now, often the buyer will come in and realise that, and then the first thing they're going to do is replace their share incentive scheme with their own, because they're clearly key. Okay, but it's a great way of preparing for a potential trade sale or an MBO, but you go through that first 3 years whereby the EMI option scheme is brilliant because it's a tax advantage scheme, and it's, if employees leave before they exercise their options, or even if they're fully vested and they leave, well, the company, the options just lapse typically. It depends. They can all be set up in a completely different way, but it does test the employer. And they're very good, particularly for startup companies, but also companies that have been going a long time who just want to go, we're going for our next stage of growth. What we want to do is we want you to participate in the capital value of what you're going to help us build. So you draw a line under the stand, you grant the options, and then the employees get a sense of in some respects, if it's a really effective effective one, they can become golden handcuffs as well, because those guys wanted to leave, maybe found another job, and then they start to go, well, if I just hang on for another 2 years, then I'll get this windfall.
That's what I see a lot of in growing, ambitious, shall we say, aspirational business owners that are looking to get to level 3. They aren't going to get to level 3 without retention of key talent. So this, for me, is the word golden handcuffs is quite an interesting phrase, and it's without wishing to restrict people's careers, but at the same time, we've got to play the game, right? So really interesting insight. What a good conversation. Again, hopefully everybody watching and listening is taking loads out of this. Now, I want to turn our attention now to some of these devious questions that we've asked Ian to answer. And unlike most people that jump onto a business spotlight, we enjoy everybody's time and contribution. But this time, Ian's already answered them. So I've got them sat here in front of me. I'm going to go to the first one. It made me laugh. It really did. So it was question 6, Ian, and the question was this: what are your keys to effective management? And your answer was, every now and then, lose your shit. So tell us more about that. Where's that coming from? I love that.
I must admit, I think that was on one of the earlier ones that I was probably putting the real answers down, and then like trying to take them off and put more sort of political PR answers down.
Don't worry about it.
When you're there, I find as a leader, I think you've got to know when things are getting a bit serious, and there has to be sometimes a point where you can't cross this point. The culture at this business is you don't cross that point. You cross that point, fireworks are going to erupt, and it just I don't know. You got to be taken seriously. You need to get respect. I'm not saying that screaming and shouting at people is the way to do that, but every now and then you've got to kind of be seen to be that this is important what we do. And there are going to be times where it's going to be serious, Ian, and it's whereas 99% of the time it's friendly and fun, but it is serious what we do. People entrust us with their compliance, and we got to make sure that we have discipline. It's very important.
I think I agree with you totally, and it's refreshing to hear a business leader speak like this. The typical owner manager is a technician. They have not been to business school. They have not learnt about the dark arts of leadership and management, have they? Yeah. So to actually hear somebody with the experience that you've got to share say that there are times when serious Ian has to come out.
Yeah.
That's okay. Have you ever read a book called The Road Less Stupid?
No.
Have a read at it. The Road Less Stupid by Keith Cunningham. Yeah, great book. And basically what you're describing there is exactly what Keith says around having the culture of, okay, we can be congenial and we can be upbeat, but there also has to be rules of the game.
It's got to be, because it's just not fair it's not fair on everyone. It's got to be balanced. It's got to be fair. You can't have, because otherwise you have some guys who will just take everything on their shoulders. They tire themselves out. They wear themselves out. They don't like coming to work because they feel too busy, too stressed. And it's because I haven't stepped in and said, listen, that's just no, enough is enough. You need to do your assignments that you allocate properly. So yeah,
we find that businesses are a reflection of the people that own them.
Yeah, well, they've got to be. Yeah, that feels. Yeah, it's going to be, isn't it? Yeah.
Yeah. So if your business is structured, respectful, follows the rules, but at the same time can blend having a great time mixed into all of that, that's going to be a reflection of the leadership team. So well played, Ian. Okay, good. So how do you visualize then? What do you do to plan your future? You've talked a lot about people around you, clients and prospects that have to have 3 to 4 years worth of restructuring and thinking and preparation time. So how are you doing it, man?
Well, so because I kind of speak to a lot of clients about exit planning. You know, it wouldn't be right if I hadn't done it myself. So it's not always appropriate. It depends on how much kind of energy and zest you've still got for doing what you're doing. And I never thought I would ever be in a position where I wouldn't want to work 60 hours a week. You know, I always thought, oh, yeah, this is what I love. But actually, you know what, you do feel a bit, you know, there has to be an end to this thing. I can't just do it forever. So I found that writing my exit plan at the very beginning, even before I started, so I started this firm in 2016. I had a way that I was going to exit, but I was lucky enough that because I was working with James and the boss on some other clients, once I realised how it works, because I'm a technical person, I'm a detailed person, and once I realised how it worked, I could then imagine how to do it, and then I could start to put names and job roles into this kind of into just basically a spreadsheet and just think about cash on exit, valuation, how it's going to work, who's going to get what, how we're going to structure it. And by doing that, you kind of come back to where you are now and go, all we've got to do is follow the plan, and that's basically our exit. And it doesn't necessarily mean I don't want to leave the business. I just want other people to step up now so that we can, you know, move forward.
So that was the next question. Is your exit built around an MBO or is it a third-party acquisition?
Oh no, MBO.
Okay, didn't even require any.
No, there's no way I'd let another accountant. It means too much to me. It means too much to the people who work here.
Well done, man. I like that. It's very distinct. And we talk at Powerplay a lot about the difference between marmalade and marmite here. So marmalade players tend to be sweet and sticky. Marmite players are distinct. It's pretty clear which pot you fall in.
Yeah.
I get that. That's great. Respect where respect is due. So values. We talked a little bit offline about values. Now, you're stating here values. Number one, the customer is always right, and number two, the service value based around phone and email. Tell us a little bit more about that because we're interested there.
So I think when you first start off in business, it is quite confusing as to how to do it in terms of, well, is it all about my team and it's all about looking after my team, which of course it is, and you confuse yourself, and I confused myself at trying to understand how to do it, and then I looked into a bit of legal maxims. They're called legal maxims. Which are the sort of bedrock of the legal system and the contract system that is the commercial world. And one of those maxims is the customer's always right. And I thought, you know what, if that's good enough for a legal maxim, that's in equity. So equity is trying to be balanced. And I thought, you know what, that is it in a nutshell. Yes, the team are my responsibility, but ultimately, the customer's always right, and it's simplified things in my mind. So it doesn't matter what happens. Customer is always right, and forget about everything else then. And it just cleared my mind, and it just made it easier to just deal with everyday situations. It's so easy then, because you're just like, yep, you're right, yep, 100%. Yeah, understand, we'll get it done. The customer service is purely, fundamentally, that is what we do. We are here, telephone and email support for our small business clients. That's what they care about. That's what they care about. They want to know when they email us, it's high priority and it's going to get dealt with very, very quickly. So we've set our whole business up around, I answer 90% of the phone calls, which sounds ridiculous. But who's phoning and why? They're phoning because they need help, and they don't want to be passed around. Oh, somebody saying, oh, okay, well, Ian will give you a call back tomorrow, or I'll pass on the message. We We don't get it right every time, of course we don't, because I might be on the call or I might be doing something like this and the client phones, but I'm going to pick up the phone and get right back to them. And we introduced something that's so simple, so long ago. We know who's calling the office.
Mhm.
Their name comes up on our phone.
Yep.
So if it's the 29th of June and I see a client phoning, there is no point me answering the phone. I know why they're ringing. They've just been sent their payroll or their VAT or their management accounts or their accounts. I'll wait until the guy who knows why they're ringing picks up the phone. And we do try and pick it up within 3 rings. If it's not picked up within 3 rings, I'll pick it up. But we're just trying to say, we're seeing it from the customer's perspective. Don't ring. All I've then got to do is say hello, do all the niceties. Then I've got to transfer you. You know, we're wasting each other's time. I know why you're ringing.
Yeah. Well,
And
again,
if you, yeah.
presumably you're educating your customers to this effect as well, right? So you're taking ownership for educating your client, right?
Yeah, they just know. Like they'll always say, "Oh, if you've picked up, that's weird. I wanted to speak to you." I'm like,
What happens? What happens if the customer's wrong? I mean, you know, the old adage of the
yeah,
customer's always right until they're not, right? So because customers make mistakes, they demand things perhaps which are unreasonable in some instances. How would you recommend to your team that they handle that?
well, it's just customer service. I mean, yeah, okay, they it's just a mindset. It's just a mindset. I think, of course, yeah, they might say something that's technically incorrect. Well, it's just a question of respectfully just going, possibly, I do understand why you think it might be. Here's the rule, it's quite clear. And sometimes you do have to get a little bit more strict and say, look, this is the way we're going to account for it. We don't have to do it. There's plenty of other accountants. It's a mindset thing. It just simplifies the attitude of us and our customers, I think. That we're here for them ultimately. Without them, we got nothing. But then the team and my responsibility in terms of how they develop and their welfare. But I just find it cleared up all the confusion in my mind, and it was just like, well, that's the way we're going to do it. That's who we are. We're here for our customers.
I think it's a really difficult question to answer, isn't
Yeah,
it? So I find the a lot of people are world class at this, and you're clearly in that space. You got to challenge, but you're going to challenge under the auspice of the customer is always right. So it's respectful and it's cultural and it's consistent. There
yeah,
are businesses out there that really struggle with it. Often it's professional services because their client base is particularly demanding, very demanding, will chop and change what they want, will try to impose totally unrealistic timescales.
mm,
It can be extremely difficult for those businesses to remember that the customer is always right. But again, to play as you'll know the phrase, to play above the line, it's on you and your team to take ownership, be accountable and responsible, right? You have to. You
yeah,
can't go to blame, excuse, denial, otherwise you're out of the game.
yeah. But yeah, it was just I think it was just because we got involved in another business because we actually run a hospitality business as well, which I
Okay.
fell into. Again, I was looking for something that would work for them as well.
It's your origin, though, right? It's where you came from.
Yeah, well, yeah, absolutely. And I was I was trying to help my local community to make sure that we sort of salvage this business that was, that was I feel is quite important. And it felt to me like it's an easy message to convey, and it's just like just don't question it. If you have that attitude of they're always right, and just basically within the rules, let's just service their customer needs. Again, it's just about simplifying their mind, and so that they don't get confused about why they're there. That is their job, is to serve their customers at that point in time. And yeah, it just works. It works across the two businesses quite nicely. So
That's
we've got that.
no, that's good, and it works because you're consistently applying it. You're the gatekeeper the custodian of culture is exactly the case. So listen, last question then. What are the keys to business growth and success in your opinion? I mean, you mentioned here finance, accountability, motivation.
Yeah.
Do you just want to let's wrap this session up for the listener and the viewer on that basis? Just expand on those points for us, Ian.
So I always felt in being in practice that there's two distinct roles in practice. There's the accountants, the technical people who do a very specific thing. That's our job. And then there's everyone else. And there's a huge support infrastructure that you need in any business. Yeah, you need people in admin roles, sales roles, HR roles, but the key one, of course, is finance. But interestingly, and I haven't logged into my own bank account since 2017.
Fascinating. Okay.
I don't need to. That is such a fundamental part of the business. The person I trust the most, that's their job. Non-accountant don't need to be. They can be educated on how to do the nuts and bolts. It's fine, but you need somebody who's good at being organised and who can take ownership of that, and that's fundamental. And the other thing as well is I don't really want to know. It's almost too emotional. I just like get that thing away from me. Even though I do it for my clients, I'm objective there. There's no that's we can see the problems and we can warn them. But for my own one, it's a bit like somebody else do that. Accountability is key. You've got to find people who hold you accountable, because if you're setting the standards and your standards slip, sometimes you need to kick up your own arse, and you need to find somebody who's got the courage and the trust mechanism internally to say, no, off your phone. I know it sounds silly, but it's just like, no, you're setting the standard. You can't.
Who does that for you?
Sorry?
Who's that for you?
So I've got a managing director here. So who's been involved since the very beginning. And I didn't realise accountability was important until I get held accountable. That wasn't deliberate. The finance one definitely was deliberate.
Excellent.
And the accountability one, I've realised over the years that actually it's fundamentally important that somebody is pulling me down when I get a bit carried away and I want to go off and do too many silly things. It's just think about it, let's plan it out. And it's just like, actually, I'm glad you said that, because I've changed my mind completely anyway. So that's important. And we've got to be motivated, haven't we? There's got to be something burning deep inside.
We did a piece at our local our recent 90-day planning session in June around passion, making sure, passion's the key, isn't it? People buy people, but they buy passionate people in the main. So that's fascinating. Ian, you mentioned your bank account. Is it fair to say that what's in the bank account, whether it's dust, cobwebs, or it's a red number, or it's a phenomenally beautiful black number, it's all an outcome of doing business, isn't it? So the better that you are at doing business, almost certainly the better the reflection of the bank account.
Absolutely.
It's been a pleasure to talk to you. I've really enjoyed it. I think you are the first accountant that we've had on Business Spotlight. Let me tell you, I have worked with a lot of accountants over the last couple of thousand years that I've been doing business. So I want to say thank you for bringing something a little bit different to the table, and the energy and the passion is clear. And I love the fact that you said, I need my MD to pull me down and stop me from getting involved in, I'm like, wow, that's unusual in an accountant. That's fantastic. So pleasure, really good. Maybe at some point in the future, we'll get you back on if you don't mind, and we'll ask you some more things.
Happy to do that.
Good.
I've enjoyed it. Nice to speak to you, Ellis.
Thank you, Ian, for your time today, and we wish you all the very best.
Thank you very much.